Assalamu alaikum. Welcome to question 19 of ATX. And this question is also on demand by a member of my YouTube channel. So, this is a group question relating to groups, Plad and Quil Limited. So, now we'll, this question has mixture of lot of things. Okay. As you can see from this requirements, these are not the requirements in detail, but these are just a summary of what you are supposed to do. So, this has the tax advantages of a company being a wholly owned subsidiary, consideration of group relief and double tax relief, group registration for VAT, failing to report a chargeable gain, this is ethics, and inheritance and capital gain tax of gifting of share. So now we'll go to, there are three exhibits, 1, 2, 3. Third exhibit, the last exhibit is work to be carried out. Here's where you are going to get all your requirements. So we'll straight away go to requirement exhibit 3 and read our requirements. Okay, so requirement A is group relief and you need exhibit 1 for it, where you are supposed to prepare some notes, and it's for 18 marks. As you can see, the highest mark is for part A, but it's divided into 3 sections, 1, 2 and 3. All these 3 together adds up to 18 marks. Now part B, it is group registration for VAT worth only 3 marks. C, it is where you have failed to report chargeable gain for 5 marks. This is ethics. And finally, CGT and inheritance tax because you are gifting a share in a company. For this, only for part D, you need exhibit 2 worth 14 marks. So part A and D are where your highest number of marks. So straight away we'll go to requirement A. Now, because this is a note, you just need a proper heading and a subheading. That's it. This subheading you can pick up from this requirement itself. For example, when you're answering A, start with group relief, then group registration for VAT. So all these 3. Now, first one. Explain with supporting calculations. Whenever it says explain with supporting, you need explanation on your calculation. First calculate, then explain. Obviously, when you are writing, you should know what you are calculating, right? So, maximum amount of group relief that they need to receive for 31st March 2025, such that none of its double tax relief are wasted in respect of Chechen tax. Chechen is another country. Okay, and its UK corporation tax would be nil. So they have given you a basic idea. What do you have to do? Your UK corporation tax has to be 0. Chechen tax has to be in such a way that your double tax relief is not wasted. You have to relieve your group relief in such a way. Okay, and you should assume the rate of corporation tax is 25%. That's the first part. Next requirement under A. Prepare calculations. Remember, you should not provide any explanation of this calculation. In the second part, it's pure calculation. Calculation of corporation tax of 2 companies for 2 years. And calculation should be on the basis of trading loss of Quil. You are going to get it utilized as soon as possible. That means you don't have an option to carry it forward. Okay. Whilst restricting the amount of group relief that you have calculated in first part. Remember your group relief. Okay. Whatever you calculate in part, you are restricting it up to that. Now, third one. Conclude. It's a conclusion. Small part. Whatever you have done in first and second part, you need to conclude in the third one. That means you have to do the first part and then the second part, then the third part. You can't change the order. Tax advantages of Quil becoming a wholly owned subsidiary of Plad as opposed to being owned personally by Claire. So this is like you personally owning a company versus you owning it through a company, parent owning a subsidiary company. Advantages, tax advantages. So while carrying out this work, they have given you two information. First, 200,000 annual investment allowance is available to Quil for this date, and he will claim maximum annual allowance. Neither of the two companies are required to pay corporation tax in quarterly installment. So you don't have to see whether it's a small or a large company. No need. This is true regardless of who owns the Quil, whether it's a company or it's Clear. So first, let us finish with the first part of requirement, then we'll move on to the other parts. Okay. So for that, we'll go to Exhibit 1 and we'll read it. So here, Exhibit 1 starts. You have been given, this is remember plate, for plate. You have been given the trading profit in UK 58,000, trading profit in country of Czech 270,000, and this 270 is before you deduct 14%. So here tax is 14%. Tax is lower in Czech. Okay. Now, this is for year ended 31st March 2025. So we assume the figures for the following year will be the same because they are stable. That means 31st March 2026 also we assume it will be same, and hence 328 taxable profit. Now we are moving on to Quil. All these things you can take your own time and read. If they are into what line of business, what they are doing, they are resident. Both are resident in UK. Okay. So they are mainly, Plad trades mainly in UK and UK resident company. Very important. That means he is chargeable to UK corporation tax. Okay. Now, Quil. Quil, okay, is also a UK resident company. Now, so the first 2 years of their budgeted results are shown for Quil. Okay, this is before you deduct capital allowance. Whatever the trading profit and loss given of Quil is before you deduct capital allowance. That means you have to calculate the capital allowance. Okay, the chargeable gain will not qualify for rolled over relief. So you do not need to waste time to figure out whether this relief is there or not. Okay. Now, so let us go here. This year, 2025, we have a loss of 120,000, and 26 trading profit 162, gain 16,000, and we have this Quil has purchased on this date. That means it falls in 24-25. New machinery and equipment 160, excluding VAT. Newly construct building used for storage and manufacturing and storage 600. This is also excluding VAT. Now, remember, you are going to bring this building to use on 1st Jan 2025. Doesn't matter when the construction of the building starts. You are bringing it into trade from 1st of Jan 2025. So cost of the building 230 includes thermal insulation and air cooling, and the cost includes 150 in respect of land. Remember, special rate pool SRP, it applies to that. This is our main rate pool. Okay, VAT we are not going to read now because VAT comes under part B, requirement B. So we'll leave here and we'll immediately go to the answer. What do you have to do? Go back to your requirement again. Now link. First, group relief. So now, first we'll immediately go and maximum group relief. Okay, this has to be a heading. Remember, they told explain and do. So what is your UK trading profit? 58. And what is your taken? 270. But what do you have to find out? Remember, when you go by the group relief, what is the loss? Loss was 120,000. If you see Quil's loss was 120,000. And if you go by UK trading profit, see, you have to, all your entire UK trading profit of 58,000 will be utilized against this 120,000 loss. Then only corporation tax of UK will be zero. That was the first aim. Second, in order for you not to waste double tax relief, okay, see, Czech profit is 270,000. UK profit is 58. Right? One might say, okay, utilize 58 entirely against UK profit. The 120,000 of Quil's loss. Done. So what's remaining? 120 minus 58. 62,000. 62,000 loss is still remaining. One might say against this 270 of Chaikin, we can utilize this 62,000 loss. That means the remaining Chaikin profit will be 208. One might say like this also. But this you can't apply, it's incorrect. Why? There's a condition. You are told you can't waste double tax relief. In order for you, if this condition was not there, not to waste double tax relief, then you can go by this method. Whatever is remaining after you deduct from 58,000 UK profit, balance you deduct from Chaikin's profit of 270. But because they told not to waste double tax relief, that means some of the Chaikin's profit should be subject to corporation tax. This leads us to the second point. We have to find that profit, which should be subject to UK corporation tax. That means what portion of Chaikin's profit should be subject to UK corporation tax. In order to do that, this is the working that is required. 270 into 14 divided by 25. So 270,000, not entirely, will be charged to UK tax. What is it? What is the UK tax? Chaikin's is 14% and UK is 25. If you get it, it's 151,200. So this will remain to corporation tax. This amount of Chaikin's profit out of 270, because we want to find the portion. How much of 270? Out of 270, how much was charged to UK corporation tax? 151,200. This much will be charged to, this much of Chaikin's profit will be charged to UK tax. That's why you will get the double tax relief. So 151,200, take the UK corporation tax is 25% and it is 37,800. If you do it this, take 270, take the Chaikin's profit and apply 14% because Chaikin's is 14. This is also 37,800. In short, what are we doing? We want to find this figure. That's why we did this 14 divided by 25 on 270. To find this, both has to be same. Remember, this is the whole idea. Whenever you are told not to waste double tax relief, this is the method you have to do. Find the fraction of the overseas profit. Get the UK corporation tax on that. So 37,800. You see here is 37,800. Here also 37,800. So whatever the Chaikin tax paid by Plad, Chaikin's tax is 14% on 270. 37,800. Okay. So 25% of 152,200 will lead to 37,800. Okay. Now, so in this situation, Chaikin tax suffered will be fully relieved. As the lower of the UK tax and the Chaikin, being the lower, whatever is the lower is 14%. Chaikin's tax is lower than UK tax. Okay. So here, the Chaikin tax. Now, so this leads us to conclusion. Finally, you will give the conclusion. Then what should be the group relief? UK profit of 58,000, and from Chaikin, how much will you take? Remember, out of 270, only 151,200 is taxable. So this profit 118,800, 58 and 118,800. So if you add 118,800 with 58,000, it leads to 176,800. Understood? So 176,800. From UK profit 58,000. Chaikin profit we have to find out. So 270 is the Chaikin profit minus 151,200 because this will be chargeable to UK corporation tax. So what is the profit that is left for Chaikin after you take the UK tax out of it? 118,800. Add that with UK profit, the total group relief will be 176,800. Okay. So with this, now objective is fulfilled. What was the objective? UK corporation tax Plad's UK corporation tax will be fully covered by this DTR, double tax relief. That means there will be no UK corporation tax payable at all. Now we'll show it through calculation. This was the explanation part. Okay. So what was the total profit? If you add a UK, it was 328. Start with this. Taxable total profit of Plad 328. How much was group relief? This much. You are left with this. On this you charge 20%, 37,800. So 151 and 25, 37. 27, this one lower is both are same. So 2. Now you see UK corporation tax is 0. And you have utilized the double tax relief also. You didn't let it get wasted. So 176,800 is the group relief. This you need to remember, by the way, because you need to carry it forward to the second part. Okay. Now coming to the second part, corporation tax liability of the two companies for 2 years you have to find out. Assuming trading loss we are utilizing immediately, as soon as possible, keeping the group relief same as in first part of A. So first nicely we'll write like this. We'll write the name of the company because there are two companies. We'll write which year end because there are 2 years. Even if it's 1 year, you have to write the year. Always make the habit of writing the date. Which year ended? Very important. So as we have seen just now, for this year ended, no corporation tax. Corporation tax liability of Plad will be nil. As explained above. Do not try to show it again and say 0. Because of group relief and all those things, it's 0. Because in 25 there was a loss. That's why corporation tax in UK for Plad is 0. Coming, so immediately one line, very easy. Coming to this 31st March 2026. Again, remember what they told for Plad? They told they are assuming same profit will be there because it's a stable company. So again the TTP will be same without group relief. But here for this year when you are group relieving, you can't take the same figure. There is a working for it. And I will take you to that working before we proceed ahead. So working has to be separate from your main table. Keep some space like this. Write the conclusion also. But before you answer part B, after you finish all the 3 parts of A, then you have to show your workings like this. You see? Workings. Working 1, capital allowances. You need capital allowances, by the way. First, working 2, structure and building allowances. There is a structure and building allowances also in some questions. And 3, the loss memorandum of Quil. This comes last because you need your capital allowance to deduct from your trading profit. That's why you need first capital allowance, you need your structure and building allowance, then only you can arrive to loss memorandum. You see? So first we'll start with the capital allowances. It's very easy. Most of the students code well also in this area. So there are 2 pools, main pool, in this question special rate pool and allowances. And one asset will qualify for AIA. Total AIA is 200,000. What is it? Exhibit 1. Here. So on this 160,000, on this new machinery and equipment 160, you are going to get AIA of 200,000. But there is a special rate item also. Remember, whenever there's a special rate pool and main rate pool, we give preference to special rate pool when we allocate AIA. Why? Because WDA for a special rate pool is less compared to main rate pool. That's why. So what goes to special rate pool? This 230. Where it has thermal insulation, air cooling and all those things. 230. So 160 goes to main pool, equipment, new equipment, 230 special rate pool. Okay. So 160 goes to main pool, 200, and from this 230 special rate pool will deduct AI of 200. Write it in allowance column also. Then WDA 18% for main pool, 6% for special rate pool. Both together allowances. Then you add, and this is your total allowance for 2025. There are 2 years, 236. This balances will be carried forward and used in 2006 as opening balance. On this again apply 18 and 6%. So this too will give you the allowance, and this is the carried forward. So this is for 25, this is for 26 allowance. Structure and building allowance. Remember we used the equipment. Go to exhibit 1 from 1st Jan 2025. Okay, we use the building. So 2025 means Jan, Feb, March, 3 months. Only 3 months will use for 25, 24, 25. But the next year, it's for whole year. Okay. What is the building? 600,000. 150 is land. So now, capital allowances is over. We'll go to main pool structure. From the 600, we have to take 230 out because that 230 we have claimed AIA here, and it's for special rate pool. Already AIA is claimed. Capital allowances has been claimed on that 230. You can't take it in structure and building allowance also. That's why we take 230 out of 600. This 600 includes everything. And this 150 also you have to take out because 150,000 is cost of land. We don't take structure and building allowance for land, only on buildings. So it's 220, and structure and building allowance is 3% fixed. And because it's from Jan to March, only 3 months. So it's 16550. And next year is just this 220 cost. Just apply 3%. That's it for whole year. So 6,600. Done. Now we are moving on to the loss memorandum. For 2 years you have to write. Remember, for this year, no opening balance was given already. You did not bring forward any balance. But the current year, there's a trading loss. How much is the trading loss? You have to calculate, isn't it? Go back to exhibit 1. This was the loss, 120,000. With that, see, from loss you are supposed to deduct capital allowances and SBA, 160,000, right? So from 160,000 it's a loss. Normally if it was a profit, we deduct we deduct allowances from profit. It brings our profit down. But here is a loss. So with loss we add the allowances. So we add capital allowance as well as SBA, structure and building allowance. So with that 120,000, we'll add 230, 600 capital allowance, this one, and this 165 because it's for 2025, 1650. So all this together will give you this balance. Okay, since Quil had made a profit loss, there is no profit, there is no total profit of Quil. Again, it is to offset the loss, but group relief is there. This group relief we have done previously, 176,800 in first part of A. Bring it forward here. No need to do it again and waste time. So this is the trading losses carried forward from 25 to 26. You see, this becomes the opening balance in 26. From this, you then offset total profit of Quil because Quil has some profit in 26. First, you should always offset against your own profit before we go for the group relief. Okay. So how do you do that? How much is the Quil's profit? 162,000 plus 16,000 gain. And from here you deduct the capital allowances in SBA that you have calculated in working 1 and 2 for 26. So 162,000, 16,000 also. You deduct capital allowances. How much is for 25,308? And the 6,600. And you get this figure. This figure you get. Once you get it, okay, remember you have to utilize your loss, this one, as soon as possible. Okay, just so this that you have got here, 29,358, it is the balancing figure. So that this becomes 0, nothing to carry forward. You can't carry forward because you want to utilize as soon as possible. Read the requirements very carefully. You can't carry forward the trading loss. You have to utilize it as soon as possible. That's why this is the balancing figure, 29,358, that you have to surrender to Plad. Done. So now we'll go to our working number 2, 29,538, isn't it? Isn't this what we got just now? We are in Plad. Okay. So from Plad, this 29,358, we are utilizing Quill's loss against Pale's profit, group relief. So you deduct it. Then you get your TTP and take 25% on that. Lower of DTR. So remember, this is Chaikan's profit. UK tax is 25. And already Chaikan's tax we have calculated before, 37,800. It is 270 into 14%. So the lower is this 37,800. And this time we'll have corporation tax liability. There is no rule for 2026, only for 2025. Because Quil was having a loss in 2025. So this is the profit of Plad. Plad we are down now for both the companies, both the years we have to give corporation tax. Now we are moving on to Quil. We are still in the second part of A. So 25, 26. Remember this was given loss and this is the profit. This is trading. From trading, before we move on to our chargeable gain, do not touch your capital gain first. Finish with trading profit and loss. Before capital allowance, now deduct capital allowance and structure building allowance. Already working 1 and 2 are done. Right in the correct year. Then you get your trading profit. Then you take your chargeable gain. There's a chargeable gain of 16,000. It comes later. Do not add it with trading profit. Then there is no losses brought forward here. But here there is a loss brought forward. It's this 146,092. There's a working 3 for it. Not just because it is this and you want to bring down your profit to 0. No. We'll see here. So when we checked the memorandum, it is this. It is this figure, 146,092. That we want to offset against this. So it is this 146,092. Okay. Then we'll have no corporation tax, 0. Now we are moving on to the third part, conclusion. So conclusion. Now you have the figure with you. Just explain. See now, what are the advantages? They told tax advantages of owning it through a subsidiary rather than Claire owning it personally, right? So if two companies are in a group relief, they're going to get a group relief rather than being owned by Claire. Okay. What was the trading loss? 176,800 and 29,358. See, these are what it was group relief. I'll go to loss memorandum. You see, I'll highlight it with a different color. This 25, this for 26. These are the figures we have taken. Okay, so that's what, and we got the total. This will be group relief. Okay, so this would be relieved by a group in 2-year period rather than being carried forward. If this was personally owned by Claire, okay, if Quil was personally owned by Claire rather than by a group, your losses will be carried forward. It will not be group relieved. Next advantage. This is an advantage from the point of cash flow. Why? You delay the total tax payment. Rather than carrying it forward, get it relief now and you don't pay any tax. Didn't you see here? Here. You see? No corporation tax for Quil. And for PAT also 25 no corporation tax. Only in 26 you have to pay. So you're saving on cash. But if you carry it forward, you have to pay tax now. So this is group relief and applied UK 25% corporation tax. So this much of tax you are going to save from the point of cash flow. Insert one more advantage is there is no certainty that losses would ever be relieved if you carry it forward. Okay, let's say group relief is not available. Then what should Quell do? They have to carry forward their unused losses. So you don't know when you are going to make that profit and when these losses will be utilized. There's a risk for it. So these are some advantages. Now, so you see after conclusion, after you finish the first part of A, second part of A, third part of A, then you go study your workings. This should be your way of approaching a question like this, where you have calculations and explanation. Working 1, 2, 3. And it makes common sense also, right? Rather than showing loss memorandum first, you have to show capital allowance and SBA. You need capital allowance and SBA to get your loss because you have to deduct from your trading profit. Coming to part B. What should be the subheading? Group registration for VAT purpose. Very simple. Just pick up from the requirements. So we'll read that requirement as well. We haven't read it. Now is the time. Pause, go back. In fact, this is the technique that I used to use during my exam. It's easier, saves a lot of time, only for 3 marks, 3 points. Any additional matter which Clay should be aware in relation to group registration for VAT. Note that Clay is not a sole trader. Let us go to Exhibit 1 and pick any information if it's relevant. So this para. So he wants the two companies to register as a group for VAT purpose. He knows that if you go for VAT, it eliminates intra-group supplies and it reduces administration. So these things you don't have to repeat in your answer. Okay, and they want to use annual accounting scheme. Remember, for VAT registration, there are 3 accounting schemes: cash, flat rate, and annual. But if you're in a group, you can't go by annual accounting scheme. Okay, so now let us write it. So what do you have to do? The two companies, see, they are telling what information you need to register for VAT. For two companies to register as a VAT, both have to be established in UK. Okay, they have to be established in UK, the two companies. Whoever wants to go in a group. It can't be that one is in UK, one is in another country. And one controls the other, or they both are controlled by the same person. So in this case, see, first you write general answer, then you bring to Plad and Quil. Then you refer to the case study. Accordingly, Plad and Quil, they can register as a group. Whether Pale owns Quil or they both are owned by Claire, whatever is the arrangement, they can form a group. Why? Because they're in UK. They are UK registered. And Claire should be aware. See, the question says they should be aware of what information. So Claire should be aware annual accounting scheme will not be available if the two companies are registered as a group. In case you forgot this condition, go back to my VAT. There are 2 lectures on VAT. So go to the lectures on the VAT and check where I've explained you the three scheme, and go under annual accounting scheme. There I told if you are registered as a group, annual accounting scheme will not apply. So that knowledge you have to apply here. So it's just 3 points. Okay, that's it. Now not reporting chargeable gain, ethics. This is easiest. The question told you, okay, explain the implications for Plad number 1 and our firm. Plad and our firm, two requirements. Few marks for Plad, few marks for our firm. Okay. On what? On the failure to report chargeable gain to HMRC. Remember, you should not. It's written in bold, capital letter Y. Because even if it is repeated, students often make the same mistake. They still keep on addressing money laundering, penalties, interest. Do not address money laundering or penalty in your answer. If you do it, you're not going to get professional skill marks as well as technical marks. Because already it is spoken to clear. So we'll go to exhibit 1 and see regarding anything it's there or not here. This part. So there is a 21,600 chargeable gain which has been omitted 31st March 2020. And this because the gain arose in respect of sale of land. It was reported for the purpose of stamp duty land tax. They are assuming that they do not have to do anything with it and HMRC only will contact them at some point. This is their point. So now you have to say what you have to do and what implication is for the firm. Okay. So if you see the answer, you see the answer is divided into two parts. One is for Plad, one is for our firm. Because that's how the requirement says. Okay. So it's for 5 marks. You see 2 points for Plad and 3 points for our firm. So what are the two implications for not reporting chargeable gain for Plad? Remember, it's a tax evasion. Company has a responsibility to report this to HMRC. Company's responsibility. They have to report it also. They have to pay any outstanding corporation tax also. If they don't, it's a tax evasion. Number 1. Number 2, HMRC will charge interest on any tax which becomes payable. Okay, this is the implication for Plad. HMRC will charge interest on Plad. Coming to our firm, what are the implications? What you should do? You should consider how this error arose. Number 1. Number 2, thread to your fundamental principles. What are the 5 fundamental principles? Confidentiality, not in this case, it has nothing to do. Professional competence and due care, it has nothing to do. Objectivity, no, it has integrity and professional behavior, these 2 areas. So it's a threat to this 2 area. Therefore, unless chargeable gain is disclosed, you should not continue to add. And third point, this is always the last point. You have to notify HMRC that you are not going to work for Plad and you should not give any reason. Cease. But the cease comes at the end. Do not immediately state by saying I'm going to not work for them or it's unethical, cease working. No, it comes at the end. After all the other areas, you have touched upon other areas. First you will tell them. If they are not notified, then you will inform HMRC. Then you will cease. Part D. Okay. So this is about Laura gifting of share. And here there are 3 areas. We have to read part D for it. Exhibit 2. So these are the 2. 1, 2, 3 areas. Okay. Now, explain the circumstances which would result in maximum IHT. This question is often repeated. I've seen this in many past papers. In fact, in the few questions that I've done from revision kit, I've checked this question. Circumstances in which maximum IHT will arise due to this gift, and calculate also the amount. Second, when you are explaining maximum IHT liability, focus on the date on which their future death may occur and availability of business property relief. They have mentioned this in the requirement. You have to talk about it. Do not miss on business property relief and date on which the donor might die. Last, explain whether Laura is right to assume capital gain tax gift holdover relief regarding this gift. So we'll read Exhibit 2. Okay. So this is about Laura, who is married to Bill. They have a children called Edward and Lily. Edward is the son, Lily is the daughter. Edward, if you see the son, most of the year he's traveling in Asia. Okay. But Laura hopes if he gives a gift of shares, it will persuade him to return to UK. And Laura is a high rate taxpayer. Coming to the company, this company is an unquoted manufacturing company registered in UK, and it does not own any assets other than those which are used in trade. That means 100% assets are used in trade. Good. So now you have been given the number of share, and you have been given Laura's husband. Remember, this is given because it is related property. Whenever they want to give you a related property question, that means you have to take your share as well as your spouse. Only your spouse comes under related property. So that means you have to take this too to get the value per share. Okay. So that you will understand. Next. On this date, 1st October 2029, there was a gift that is made of 280,000. This is the value after you deduct your exemption, transfer of value. That means this gift was made. Why? 7 year, during 7 year accumulation. Okay, cash gift to her daughter Lily. This is the old gift. Now, on this date, he is giving Edward 10,000 ordinary share. She's aware that if he dies within 7 years, there will be UK IST. But assume there is a gift holdover relief that will be available. Okay, so everything is very clear. Now, first we'll decide on this. So if you take Laura and Bill, 35 and 19, this is before you transfer the gift. 35 and 19, how much? 54,000. So 54,000 out of 100 means 54%. When you have to take the percentage, you have to take both the shares. 54%. So 54% falls here. 19. Value per share between this. But when you are pricing it, number of share that you have to take is only Laura's. Only to value the percentage, you are taking both the share. But when you are taking number of shares, only Laura. So before gifting anything, Laura has 35,000 shares. What is the price? 19. So 19 into 35,000. After you are gifting 10,000, okay, there is a 10,000. So 10,000. So from 25, you are giving 10 means now you are left with 25,000. But when you are pricing it, how much you are pricing it? 25,000. So this 35 and 10,000 will be deducted from Laura. So Laura will have now 25,000. Bill husband will still have 19,000. How much? 29,000. Sorry, 39,000. I'm sorry, this is 25. So it's 44,000. So 44,000 means it falls here 13. Price is 13 and number of share will be 25,000 because from 35 of Laura, 10,000 will be deducted. So 25,000 into 13. So now we'll go back to our answer. So you see, maximum IST will occur if this condition and this condition are set out. First condition, what is it? If Laura dies within 7 years. 7 means by 30th September 2026. Why? When did he first make the gift? 1st October 2019. And if you take 7 years from that, 30th September 2026. Okay. Once the 7 years have elapsed, what happens? It will no longer be accumulated in determining nil rate band. In determining your nil rate band, remember only 7 years you take within 7 years. After 7 years, if 7 years have elapsed, any gift you have made before that will not be taken into nil rate band. So in this condition, if you die within 7 years, IST will be chargeable. But if you survive the 7 year, no IST. Next, remember they told two things for you. One, date of death of donor. Donor means Laura in this case. You have taken that as first condition. Second condition, what is it? Availability of BPR. If this happens, what is the impact on IST? So if this is also not available, then maximum IST will be chargeable because question asks maximum IST. So you always have to assume the worst case scenario when BPR will not be available. So at the time of Laura's death, this will not be available. Okay. But if you are gifting this, remember the gift of share will qualify for 100% BPR. Why? You have to give reasons. For giving reasons why this will qualify for BPR will give you few marks. What is it? Unquoted trading company and they have owned for at least 2 years. Shares are normally business property. Next, but in this case, however, BPR will not be available on Laura's death if. You have to write if. You have to give possibility. Because if BPR is available, your IST will not be maximum. Yes, IST will be there. Maybe sometimes. But it will not be there because BPR, because of 100% BPR, no IST. If the shares no longer qualify as a qualifying business property, or Edward has disposed the share before Laura's death. Unless he does this, he's replacing the shares with a qualifying business property, or Edward has died before Laura still owning the share. In this case, BPR will be available. So now we have finished it. We are moving on to the next part. Maximum. So transfer of value, there is a working one for it. You see, you write the working, write the one. I have already taken you 54, thus we have got. And 35,000, 25,000, yes. So price is 1913, we have already got, and this is the transfer of value, 340. Remember to deduct your annual exemption, current year and previous year, 33. So this. Then from your nil rate band, because this was in 7 years, this 280,000 gift, will deduct from nil rate band. This is available, taxable amount, and apply 40% because nothing you have left to charitable to reduce it to 36%. So this is your IHT. Now, last question, capital gain tax. They are talking about gift relief. See, this is a share, but this is an unquoted trading company. So, because it's an first always write the condition whenever they are talking about a relief, whether the condition is satisfied or not for the relief. In this case, yes, for gift relief, condition is satisfied. Why? It's an unquoted trading company. So CGT will be available, but relief will be available only if the Edward, who is the recipient of the gift, the one who's receiving the gift, is resident in UK. In the tax year in which the gift is made, when you're making the gift, at that time, Edward has to be a resident in UK when he's receiving the gift. Then only this condition will apply, otherwise no. So that's it. For this, we are finished with this question. You can take your time and read the examiner's report and see wherever the downfalls are. And I will just take you to the marking scheme. So first, to utilize your group relief, 5 marks. A lot of things are there to do. Then for taking the corporation tax liability for both the years of Plad, 1 mark for 25 because nothing much to do in 25. We just have to say no corporation tax. That's why it's 1 mark. But more working is required in 26. That's why 3.5 marks. Quil, on the other hand, we have to calculate capital allowance 4 marks. Structure and building is less working, so 1.5. And the 2 years, 3.5. Finally, conclusion is just 2 marks. And then condition for group register 2 marks. Saying that annual accounting scheme is not available for group is 1 mark. And then ethics, Plad is 2 marks, R form is 3 marks, Laura's death 2 marks, ownership of shares 5 marks. Then the calculation, transfer of value, inheritance tax liability, capital gain tax, and the professional skill marks 10. So professional skill marks, basically if you follow the notes, note does not have any structure. Okay, so in this case, One more way you can get your communication skill mark is by not mentioning money laundering or penalty in part C in your ethical question. For analysis, basically you are using information, okay, to demonstrate the taxes, the amount of corporation tax, not wasting double tax relief, all those things. And information that you need to determine to form a wet group. All this will give you analysis and evaluation skill. Skepticism. You are questioning the unreported chargeable gain. And uncertainty, recognition of uncertainty in relation to valuation of their shares. Then commercial acumen, the methods of loss relief, saying that you can't carry it forward because you have to utilize it as soon as possible. And then in inheritance tax, identifying the worst case scenario. This will give you commercial acumen skill. So that's it for this, and I shall see you in the next question. Till then, best of luck for your exam.